The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I know you're all ready for the inauguration today. God, there's a ton of people up there. I have a really good friend that interviews Trump all the time on his radio show, believe it or not. And he's got front row seats to this down there today. So got invited by Trump, special package tickets. It's a cool scene when this happens, even for the Democrats. Let's take a look at, not to get political here, but it's a great day, no matter how you look at it. Let's take a look at the euro. Let's get away from the U.S. for a second. Let's take a look at the euro. And we had spent some time talking about this and hoping that the next level up was going to be this 108 general area to start looking at from the short side. I want to revisit where we're at on the weekly on the euro. We always look for, ripe setups. We try to surf around quite a few instruments and try to pick the ones that are looking relatively attractive to those classical setups when it comes to profiles. And, we kind of crossed back into the profile on our long-term weekly. We came back and retested that area. That was kind of the go point as far as a trading opportunity on the long side there. If you're going to look at trading the euro from the long side, I'm trying not to. But it was definitely time to block out the short side at that moment. That's a classical setup, diving back into the box from above or below. But this is our daily, by the way, on the euro. So we were looking at this 108 as the next stop up and try to look at some short opportunities. But yesterday, we had a new profile appear actually right before this thing rallied up and touched it. So what the tone is 106.94. That's the high. Top of this profile is 106.94. So when we got up this morning, we noticed, okay, wow, we've got a new situation here. We've got a relatively thin profile, so I wouldn't put a ton of leverage on this trade, but you've got again, an area to play defense against on the short side. So again, if this didn't work, if you don't feel like it's a good opportunity relative to the height of the profile, just not really kind of being more of a volatility contraction situation, you've got a chance a little bit higher here. But right now, a lot of these profiles are fully explored, so you may be looking at this 105.60 and even lower, and the unfair lows on this is 105.85. So you got a good floor down there, and you've got a chance, if you were trading the euro this morning, to play defense above it, hit it to the tick, and that's your targets down below. So enough about the euro. Let's take a look at the British pound, and obviously we're going to hit the dollar here. So here's the long term on the weekly on the British pound, and John from Philadelphia almost called like a 500 pip move here up into 125.09. Didn't quite get there, but again, used this 120 area to kind of base and launch off of. I'm not too excited about getting long the British pound myself. I'd rather look for short opportunities, and that 125 area was just kind of an area to wait for on the long term. We've just kind of had the volatility power through these daily profiles on the British pound, So again, where we are right now, we're kind of in no man's land. If we get a daily close below 122.20, I'd get a little bit more excited about trading this back down into 120.90, but right now it's kind of a no trade for me. I just don't see a lot of leverage. And if you want to talk about the British pound more, I noticed somebody's commenting in the den. Please feel free to call in. We can discuss this. It's not a currency I really follow fundamentally at all. and here's the daily again, just try to look at this technically and start looking at the setups. I really like from the long side how this thing reversed back above that weekly unfair low literally in one day. That's a pretty powerful reversal pattern there. So we could be consolidating to move higher into that 125 ultimately. So that's why I'm not exactly excited about getting into this until we get into one of those more longer term inflection points. I'm not interested in buying, so I'm interested in selling. Here we go. All right, so hadn't talked about this in a while, the Australian dollar. If you have followed me, you know that I've not really been too terribly excited about shorting this product. This is our long-term weekly, but I wanted to show it here because we've kind of powered up, and if we have a weekly close below now 75.39, and again, you'll see these things explore the entire fair auction a lot of times once they dive into it. This has happened. I want to show the daily here. This is kind of a wait and see now, and big moves been made. Anything can happen, but I think you got to wait for a weekly close at this stage. We got up into this. It was a little. Like I said, I'm not excited about shorting the Australian dollar. I'd love to see a weekly close above, and then even see it consolidate above here is something I've got on the radar screen. I'm not glued in on it. Just kind of checking it every once in a while, see if we get those patterns, those continuation patterns happen here. But, the dollar situation we're going to take a look at in just a bit. And I'm going to show that right now. God, there's the S&Ps, the ever-present, just stay around the highs S&Ps. Just wanted to show that. Here we go. So the continuous contract on the U.S. dollar, I was really hoping this thing would just do a washout down in the 99.63, coupled with that 99.95. Didn't quite get there, and just like the euro, we had a profile up here as the open happened here on this particular bar on the daily. You've got all this in the scanner, edging higher, found a chance to catch a bid off of that, and that was really coincidental with that euro daily unfair high. So the lows here 178, bounced off of, we reached a low of 183, so that was. You got to look at these dollar-euro relationships. They're not completely tick-for-tick inverse relationships, but they're highly correlated when it comes to the inverse relationship. And the dollar was hitting these inflection points as the euro was hitting them up high. The dollar was hitting them down low, and you got really a nice, almost double confirmation there. So interesting trade. We're going to take a look at gold really, really quick. I hear the music, so we're going to be back and talk about gold in just a little bit.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And we were looking at, we're going to look at gold here. And this is what we were talking about with this 12-11, playing around with this. It's nice that we kind of had that little upside and then reversal. So we're, in my opinion, we've done our thing from the 1146. And now this morning, this is really cool how a lot of profiles appeared today. Got that warning yesterday because we were outside the last profile. And then when we have an opening, we know where the unfair highs are and the lows are. So if you've got the scanner, you kind of know where. Excuse me. I was looking at the breadth on the S&Ps, by the way. I was kind of looking at this last night. I mean, it doesn't get any more balanced than this. 50% in the middle, 27 above, 24 below, and there's the numbers on the dailies. Very powerful time frame to look at. And the VIX is kind of, spinning around down here. There's no perfect time than now. And we actually had an email about this. I forgot to mention. Somebody looked up, well, God, you can't trade the VIX instrument. Well, that's true. That's a calculation on its own, but there's instruments that kind of wrap around that VIX calculation, and one of them is in the ETF world, kind of, I guess, is the VXX. That's traded like a stock, and there's options on that particular ETF, and then there's also the VIX futures. So do a little research on that. It's different ways to play that. One of them, obviously, the market's open all the time, but is a little less liquid when it comes to the options on the VIX futures. But again, if you're looking for a big move, who cares? The VXX options are a lot more liquid, but again, you can't get out of them at night. So you gotta kind of pick your poison on that. Yeah, the VXX is a weird calculation. It's kind of got more of a downside slant to it. Read a little bit on it and understand what you're getting into either way on those. But let's take a look at gold, and let's finish up with gold. So, do I wonder or what? All right, so 1209, 1210 got up there. Yeah, again, you've kind of done your cycle. You've reversed outside the weekly back in. You're looking for areas to trade it down. Gold's in a downtrend. The dollar rallying a little bit has help this ease back a tad. And we've been kind of waiting for that dollar bullish situation to happen again, but we reached a high of 1208.90. That unfair high is 1209.60, so kind of got in the neighborhood. Got to start, again, doing what you got to do there. In my opinion, next deck down on the cycle is 1176, 1177, and the dollar may never come down to that back the truck up area, so we may just kind of continue to drift here. Remember, Trump's getting officially inaugurated today, and the Republicans control across the board, and it doesn't seem like anybody wants to break stride of their party lately, which is not cool. You know, I mean, people should speak their mind. That's why they got elected to office, no matter what their neighbors voting on up there in the Congress, in my opinion. You just got to do the right thing as much as possible for the people who elected you. So anyway, let's take a look at the 10-year. All right, so 10 years kind of falling apart here, and we looked at the trade. We were talking about recently, and I'm just going to pull up the long-term weekly here. The bigger high probability trade happened. Oh, Jesus, I don't know what that is. Happened 2 weeks ago. That was kind of coming back into this DMZ between 123.10, 123.20 for a little bit of a bounce. I actually thought we might move higher here, because we were kind of spinning around above the dailies, but then yesterday we kind of started breaking below, and that was all she wrote for a while. So right now this is kind of a no trade on the 10-year. You got better things to think about at this stage. Let's take a look at the 30-year. Similar action. Got that killer bounce off the 148.29, reached our targets, initial targets, which were that 154 general area, and I actually thought we were going to maybe bounce a little bit off this 150, 120. Didn't happen. Break through. That's the way the ball bounces, and that's what stops her for. So, not a lot more to talk about there. Let's just keep cruising. Shanghai, have been loving this trade from the long side ever since we had that kind of reversal situation. It's kind of similar to gold type action. Inversely here, getting back above 33.02, and I think we got a lot more upside on this product. Look at some ETFs associated with it. Gentleman had been, I think, short or long the triple short ETF on this, or excuse me, what was it? I can't remember. But there's some ETFs associated with the CSI 300 or the Shanghai China A shares. All right, silver, we're going to hit this and kind of empathetically acting the same as gold here. Not a lot of leverage on silver. It's kind of a pass, in my opinion, even though we're looking like this right now. I still think the dollar could move higher. It's just kind of in an uptrend. You got to keep that in mind when you look at these metals or commodities in general. Just keep that in mind. We're going to hit crude really quick. Let's see here. That's natural gas. Here's crude. So crude, I've been pretty bullish on this. It's testing my stress level. Just kind of these weekly info highs I'm trying to pay attention to on the long-term trade. I got stopped out of it again. But again, if you're looking at the long-term trade, you got a weekly close back in the box here is going to be pretty damning for this thing to just kind of continue north, and you're going to have to wait and see. I'm not interested in trading this from the short side, so that's the way I'm looking at that one. March beans. Hadn't looked at this in a while. We had a report out the other day. Friend of mine and myself, we were somehow missed doing an option trade before that report. We were talking about it and then just never did it, which sucked. 1064, 7 3/4 or a half. Let's just call it a half. We were reversing down below there. I like the action on the bean trade still to try to get short this. We're going to have a new profile probably tomorrow on the daily, so we're going to have some new inflection points there. But I see this kind of as an anomaly. I don't see beans really traveling higher. But again, that's what that line in the sand is for, 1064 and a half there. Okay. Let's see here. July wheat. Let's just take a look at this. A lot of guys aren't even planting wheat around here now. They didn't plant it. It's just not worth it to put it out. That's just the attitude around here. But that's usually when wheat continues to go higher. And then the farmers are kicking themselves. So I'm not so sure about wheat here. I'm not. Maybe John from Philadelphia might have some opinions on that. All right, guys, we're going to be right back. We're going to move on to some stocks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We had a question about the 30-year. I was talking about that a while ago, and the guys who maintain this in the background, by the way, on my team, I think do a great job. There's a lot of moving parts here. There's a lot of. I mean, if you go into this, I don't think there's a product like this on the globe. I know there's not. I don't know who would be crazy enough to try to put all this together, but all these indices that you see up here on this indices profile heat grid, these are these calculations I referenced earlier talking about and where's the S&Ps? Am I missing something here? There they are. Okay. So when I go into these heat grid speed dials, if I click, I mean, this is what I was referencing earlier about, man, this is about as balanced as you get, and VIX is pretty low, and a non-directional trade's probably in order here. But this is happening on everything in the world. I mean, if I go into Hong Kong, we do all these calculations. So the question was, there's a, and I think we talked about this 2 weeks ago. There's a POC and a unfair low really kind of mapped on the same print. That just, in our algorithm, that means you better pay attention more so to that particular inflection point. And it's not showing up on this landscape here because they're overriding. But if you go into the mouse over here, you'll see that. And if you go into the weekly view here, let me get that up. You'll see it actually, and you'll see the same numbers. Can I talk about this more? I hope not. But these futures, they're a maintenance nightmare usually, but the guys do a really good job here. If there's something ever that you see a month that's not something in the scanner that you want to see, alert us. We try to keep the front month contracts that are as active months. Sometimes you look at September beans versus November beans, things like that. You got to go with November, even though September might be the front month. So just wanted to beat that to death for a while. And here's the e-signal version. There's that, we see it in our information over here on the left, excuse me. All right, so I wanted to reference the XLF really quick. We talked about this maybe had given out of gas, and a couple of reasons for that, and that it may have some relaxing tones to it to kind of pull back off 2387. That's happened. I mean, a lot of these stocks were kind of sitting at the same juncture. Bank of America being one of them. There's that Bank of America situation. Nothing to write home about a massive pullback here, but just, it's time to take some off the table if you've been long. JP Morgan, and I saw Jamie Dimon got his $28 million bonus for his plans, whatever you want to call them, that he's had the bank do over this past year. Schemes. 82.73 unfair lows on the weekly. So we're down to, again, you got to kind of blindly stocking an uptrend, pulling back to support. I'm going to go into our scanner here, and I'm going to just show you how easy this is. I'm going to go down to uptrend support. And let's see. JP Morgan should be in here. I think we're not within the range there that we set. Oh, excuse me. It'll probably show up on the opening here. But we are, it does have to be within a range there on those unfair lows, 82.73. Let me see where we're at print this morning. Yeah, we're a little bit higher. So it would have showed up yesterday's close. But, here's JP Morgan. There's a couple other stocks. I don't think we omitted these the other day. Citigroup, again, had that overhanging new supply going to happen last week. So, again, we're kind of getting that follow through here, or even a little bit more there. Wells Fargo, my favorite stock. God, and how nice are the people at Wells Fargo these days? It'll fall away at some point. Wells Fargo, similar situation. Are these shorts? I don't think so. I just think they're a no trade right now, and you might get some better prices a little bit lower in some of these financials. Okay, let me pull up something else we were going to talk about here. I want to look at American Express. This is another financial stock that had some news, obviously. This is one, just continuing to power and consolidate and move higher. Nothing special going on here. 75.44, just coming down into support. I mean, a lot of times you don't want to trade these pre-announcement and wait and see what happens. We're sitting on support on AXP right now. So is JP Morgan. So you got some areas to really pick the battle and play defense on some of these stocks. Some of them, like the Wells Fargo's and Bank of America's, you just don't have anything to lean on there. But these might be trading opportunities here. Let's take a look at IBM. God, they've got a massive facility here in the triangle, and it's like 70% empty. Here's IBM. They're the king of outsourcing. 165.16. Trump's going to probably have something to say about that one. 165.16. Looks like we're printing this morning. So down a little bit here, sitting around the upper lows on the weekly again. Is it time to buy it? I think so, actually. Let's take another look at another stock that had some earnings-related situations here. Union Pacific. All right, so it looks like we're printing this. No prints this morning. Closed around 106.24. So this is the deal here. I think this is just an all-out buy. Even though we're going to see how this thing opens, but I think UMP is something you can play defense below 104.78 on this stock. Let's take a look at Home Depot. I'm still dazed over that Jamie Dimon payout. But you do the math. You weigh out what the prison term is versus the money and the bonuses, and it's probably calculus, but that's what you got to do. Here's Home Depot. Here's the daily spinning around. Here's the weekly. Actually, wait a minute. Let me pull up the weekly. We're crossed up again here. Here we go. I like this stock to move higher. I love this consolidation within the range here. It's kind of like the S&Ps. This is something. Don't see a lot of downside in Home Depot. You get a pop off this one, you take off half of it, and you got a free trade on. That's the way I'm looking at it. Alrighty. Let's hit Apple. This is one that the train kind of left me. All right, so here's the weekly. We're going to hit Apple when we come back, folks. Stay tuned.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And Apple, we were trying to get into this, trading about 120 and some change this morning. Here's the weekly. And again, you look at this like, wow, why didn't you tell us to buy it at 114.82? Not exactly excited about buying Apple right now, but the market itself and tech sector is kind of just edging up. So needed to see some breaks back in the profile below 114.82 for me to get excited about being short. But we've got something going on here now with the daily profile. Still would just, again, like to see this break, some technical breaks here. This is kind of Apple on the way up on the dailies. Not a lot of things to write home about on the short side until we break, let's just say 118, and that may not happen. So again, no harm done. David White was nice enough to alert everyone in the den that Bristol Myers is just getting pounded this morning. Let's take a look at it. It looks like it's printing about 51.47 pre-market in that general area. So on the landscape of things, they should give out free sedatives. So we're down here. And, you know, this is a dangerous game to play, kind of stepping in on a morning like this, and maybe wishful thinking would be rallying up in the 54.08. But the problem here with this one is you just don't have any. You need something to develop down here. This is our 240s. We don't talk about these a lot. You just need to. You need to get some. If you're going to play that bounce game, which is dangerous, you need to kind of have some kind of new area, demand area down below to start looking at this from playing a defense game, and let somebody else try to catch the swords at the beginning. All right, so let's get back to the S&Ps here really quick. Everybody's favorite instrument. Here's the scene here. We talked about this a little bit earlier in the show. It's a non-directional trade. I think at this point, it definitely looks more bullish than bearish. The internals are relatively balanced. The VIX is relatively low, but it feels like something one way or the other is getting ready to happen here. And give yourself a little room. We've been talking about that. Room being time and a chance to just put that part of your portfolio, that non-directional trade. Anything can happen. I think somebody said early in the den, let's see, let me read that. I wasn't aware of this. Today will mark 69 or 70 days without a 1% downside move in the market. That's pretty amazing. So statistically speaking, we're kind of getting into some areas that are statistical anomalies. Keep that in mind. Again, don't know which way it's going to go, but you could brace yourself for that expansion in volatility or move up. All right, we're going to take a look at the utilities. And we're trading, looks like printing down about 48.44 right now. And here we go. So I think a couple of weeks ago we were talking about this area 49, 45. This is really, I don't see a lot of leverage in this. If the market goes up, the notes could sell off. Utilities obviously don't like a higher rate structure as much as other things. So again, and here's the daily situation. So I think the utility, somebody had asked me a question about that. I think you got better things to put mental capital towards than the utilities right now. General Electric. Here we go. Again, got better things to look at than General Electric. We had pretty violent moves yesterday. This morning we had some news out. That's why I pulled it up. 30.76. We've just kind of settled back. This is where we're at right now, getting close to this 30.25. This will be an area to pick a battle on it. But again, this is one where you got to put the stops in. Anything could happen. And your targets initially be 32.03. I don't look at this as a long-term investment right now. All right, Tesla. Okay. So yesterday kind of had that gap up, reverse down, but not closing on the lows. This is, again, we talked about blocking out the short side on this because there's nothing to hang on to here. And trying to short something that's too high without any good reasons technically is a dangerous game to play. This one has put some people in the pain amplifier stage of their trading career, I'm sure. And when we look at this, David White has been nice enough to point out that the short interest has been off the charts high, and that means sometimes that things will just go higher based on that fact alone. Shorten, having to cover, shorten, having to cover. And that's the thing you got to try to avoid, is getting into situations like that. That's why, we've talked about, especially since we cleared 208, closed above that profile, came back and kind of stayed in the neighborhood and then launched again. This is, again, nothing to look at from the short side yet. We just need to see some more information. It looks like we're printing 245 this morning, so edging a little bit higher. It could move higher. Big Mo. All right, so talked the other day about this thing coming down into some areas to just pick defense. Nice weekly setup. Stop split 67.19, and now we're trading 69.55. It takes a lot to move this stock, and this is a cool move on Big Mo. Okay, Johnson & Johnson's another one I had teed up this morning. All right, so I've been pretty bearish on this stock. If you watch this show, we always kind of look for things to whack it again with. 117.23 stops above. We talked about 111.96 as targets. I still believe in that. And that's really a pick right off of the scanner here, going down into downtrend resistance. Let's see what else is on the scene today. But again, the market being in this pent contraction mode of volatility and everything else, some things are just going to unwind quickly, I think, when we get the move. So just, might be an index time right now, non-directional trade, than trying to pick stocks. But you always want to try to short the weak ones and buy the strong ones, or look for the setups that are attractive. TSO, I'm kind of bullish on oil right now. Stay away from that. Haynes Brands has been just getting pummeled here. Something to look at. The market pulls back. This thing could just race for the door again. Keep that one on your radar screen. Oh, they're my favorite stocks, Procter & Gamble. Getting some movement this morning. Looks like this is delayed a little bit, I think, on the stock side here, around 87. This is the weekly on Procter & Gamble. We're going to talk about that a little bit more when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com. Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're talking about Procter & Gamble. Looks like we're... Okay, so here's the 60-minute. This is probably delayed a little bit here. We've reached 87.62. Pre-market kind of spike up here. Those weekly for highs are 87.90. So that's something to play around with from a day trading standpoint, in my opinion. You've got a chance to play defense above there. Procter & Gamble, the market is so just spring loaded right now to go one way or the other. It could drive these stocks higher or lower. But if you got a major weekly inflection point you're looking at right now with Procter & Gamble kind of rallying into it, and you got to take that for what it's worth. If you own Procter & Gamble, I think you got to be willing to take some off here. But if you're looking to short it, you've also got a little bit of a trading opportunity. Put your stops in. Those weekly inflection points are pretty powerful. Let's do a little review here. Just kind of monitoring the DIN there. The dollar, next stop up on this, 101.87. Gold, I think you got a kind of good stake in the ground. Dollar's probably going to move higher. Gold could sink a little bit lower. You got a 1209.60 and 1211 as a decent resistance area after that weekly reversal. A close back in the box here on the weekly is going to be a big deal in gold. Crude staying away from really right now, but trying to see if we get a weekly close above 52.26. That's going to be a big deal, I think, even though we've had a little bit of a downside movement here. Those weekly closes are extremely powerful. The XLF we've talked about. We've also gold's, let's see, cruise up into 52.26 right now. Just notice that move up. Let's take a look at international paper. All right, so I was really bullish on this stock. You guys know that when we had a week close below, come back and retest 47.75 in there. New box attempting to appear. Now we've got it. The 51.40 area is going to be the support area on international paper. You got some kind of first line of defense here on the daily at 52.35. So, yeah, I hope we get a little bit lower than this, actually, and I think that international paper is a relatively safe play on the long side. I like how it's acted. But, again, the market in general could force some of these stocks up or down just by everybody being on the right side or wrong side and having to cover, and add to a breakout. A lot of these funds will look at this. I mean, a lot of times they just kind of push things because of these technical, classical setups that happen. These breakouts on the upside could have a lot of different follow-throughs going on. Trump, president, Republicans, House, Senate. Here's Coca-Cola. 40.51. I've been really bearish on this. There's something wrong with it. I think right now, if you're looking to buy Coke, you definitely have a chance to play defense here. Your initial target's 42.40. I'm not so keen on buying this thing, though. I think you got better things out there to buy. I'm sorry, we looked at that. Here we go. Wanted to cover Microsoft. Okay, so Microsoft had an email about this. Again, you've got to back the truck up here around 59.33. The markets could carry these higher. 64.10 is going to be a little bit of a resistance area for Microsoft. But again, I'm not a fan at all of shorting this stock. So breakouts above 64, pullbacks to 59.33 on Microsoft on the long side. Stay tuned for Larry and all the hosts on TFNN all day. We'll be back again Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.